So first of all, we want to identify our bias. What we have to do is, first we have to look on the 4-hour time frame because we need to see like the overall bias. So what we can see here is, at the moment we're clearly bearish. We have here beautiful liquidity sweep, and now we have here swing high, swing low, swing high, swing low. So what we can expect is on the higher time frames that we take out these lows, or maybe that we find support in around this area. That's the zones we can target on the 50-minute. We can see this liquidity sweep I mentioned, and now we see we are clearly bearish because swing high, swing low, swing high, and swing low. What we want to do now is we have set our target, and now we want to mark out the interesting zones for us. Many of you guys would expect the market to come around here and then to go all the way down. But I bet against you. Why? Because we didn't sweat this big liquidity pool right here. As you can see, we have here big accumulation, and here are many stop losses above. And what we want to do is we always want to wait for a liquidity sweep to take out the retail trader stop losses, and then we want to execute the market after that. In this case, we have here a beautiful bearish order block. So that's a very interesting zone for us. We have identified the trend, we're clearly bearish, and now we marked out the important zones like liquidity and order blocks. So we want to execute sales right here. Now you can set a limit order like this. So you can make the stop loss like take maybe the Fibonacci. I like to take the stop loss, to put the stop loss right beneath these two zones here. So as we saw on the higher time frame, you can target this order block here, but we are clearly bearish on the higher time frame, so we expect the market to take out these lows. You can make a final take profit right here. Let's look how this trade is going to play out. Here the early buyers are coming in, but I will bet they will get stopped out. Let's see how this is going to play out. You see here the early buyers are coming in. We have a first reaction. You can see we can expect a reversal. What we can see here now, we have swept this kind of liquidity. We swept out this kind of early buyers, this money trap we had here. And as you can see, as we touched our bearish order block, the market instantly dropped with volume. Why is that? Because here are the big money makers like the banks. They want to exit the market right here. Why? Because now they have generated enough liquidity to fill their own orders. And that's why so often you see after liquidity sweep right here that the volume is kicking in and the trade is going in the right direction with lots of volume. So let's see how this whole thing is going to play out. And boom, just like that. We've hit full TP with a beautiful almost 9-to-1 risk to reward. So one thing I want to show you is if you didn't want to execute the market with the limit order right here, prefer personally to go in with a market order, I would have got in right here. Why? Because I saw we swept this liquidity, reacted on the bearish order block, and then the price action kicked clearly in bearish with lots of volume. So what I would have done is I would have gone in after this 50-minute candle close, and I would have made a stop loss with 30 ticks, and the TP would be here also. So, and as you can see, it's not always the case, but in this case, I had a 12.5 risk to reward. It's because my SL is a bit smaller because I waited for confluence as well. Hope you guys enjoyed it and hope that you could learn something.